Hi everyone, back as promised. What we're going to be looking at now is inheritance tax. Now if you go into the folder on NILE, you will see there is a series of questions, some which we've looked at in class, some which are for revision purposes. This one is a revision in class question. There is other questions which are out of class, and I've also put the question on inheritance tax that was in last year's exam with the solution so you can see that as well. Just reminding you that I have reworked the question for any update in the answers that changed year on year, but last year the question was worth more, so it's not quite as is, because it was 33 mark questions last year and 25 mark questions this year. So the first thing to remember about inheritance tax is this: there are two very distinct stages to it. On passing away, there is two sets of different calculations which take place in order to come to any assessment of any inheritance tax liability. Now, the first bit that we must look at is the 7 years prior to death, so we can work out if there's been any transfers or gifts in that period which were bigger than allowances, or capital dispersions which were potentially exempt at that time, but now because the person has passed away within the 7 years, they could have tax paid on them. More likely, what they have done is they have used up that nil rate band which everybody has. So everybody has a £325,000 nil rate band for inheritance tax. But when you pass away, we look at the 7 years previous, we look at anything which has been given away in that period, and that uses up some of that 325,000. So the question that I'm going to be looking at, if you go into NILE, is called a Jim inheritance tax question. It's built in, it's got all the information in there, and we can do it in two different ways. So the first bit I'm going to look at is up to the point where we know how much of Jim's nil rate band is still available for him when he passes away. So the first thing we notice in that question is Jim passed away on the 2nd of January 2020. That is the date of death, and that tells us two things which we can do right now. So number one, the period that we're going to go back and look at goes back to the 2nd of January 2013. That is our 7-year period. And what we can also do at this point, because we know the date that Jim passed away, is we can also calculate the date which any inheritance tax will be due. Now, we take this date, we go to the end of that month, so that would be the 31st of January 2020, and we go 6 months forward from that date. So the date for this to be paid is the 31st of July 2020. We can calculate that right now before we do anything else. It's based on the death date and nothing else. So the period we're going to look at is going back as far as the 2nd of January 2013. So now in the question, you can see the lifetime transfers that took place. The first one was on the 2nd of August 2009, and he made a cash gift of $150,000 to his niece. This was a wedding present. Now that means that there was a special amount of annual exemption which could be used for paying it to see whether there was any tout, but all of that is overridden. 2nd of August 2009. 7 years forward from that date is the 2nd of August 2016. The death date is beyond that. This transfer took place longer than 7 years before death. Therefore, it is completely exempt. So at the time it took place, it was deemed to be potentially exempt. Now that it's finished and more than 7 years has passed, it is completely exempt. It is not part of this calculation. The second transaction, on the 20th of January 2017, he makes a cash gift to his son of £250,000. Lucky son. So that transfer has taken place within the 7-year period. Therefore, that will now constitute part of that nil rate band. So on the 20th of January 2017, 250,000 was given as a gift. Now we all have, this gift was not for a wedding, therefore it doesn't have an increased allowance. But we all have £3,000 every year for capital giveaways that we are allowed to claim. And you can claim the current year and the previous year. So this took place in 2017, so that's tax year 17-18, and we have a £3,000 annual exemption this year, and we can claim the one before, 16-17, £3,000 annual exemption. Therefore, the value of the gift for inheritance tax purposes is £244,000. That is the amount which will have been deemed to have been used in the nil rate band. So, the nil rate band was 325,000. He has used in lifetime 244,000, and that means on death, nil rate band remains £81,000. That is the amount of the nil rate band for Jim's estate, which has not been used while he's alive and therefore can go on to be used as part of his death estate. This is the information which we're trying to get from all of this calculation. This can now go to one side for a minute, and by magic, there's another board behind it. So, on this board, what we're going to look at is what's happened with the death estate. When he died, what is there? This that's over here, that we'll come back to in a minute, is how much of his exemption he still has left. So, when Jim died, it tells us his estate was as follows. He had house, which was 345,000. He had savings of 600,000, and he had insurance of 250,000. Now, all of that, and before anybody at this point in class would be asking me questions about why I've done this, I know that I've gone one step too far. It's on purpose. So, the death estate is 1.195 million. However, we are told that the house and 50% of the building society savings are going to his wife. Now, anything, as we know with all taxes, anything between husband and wife is completely outside the scope of tax. Therefore, this is not taxable estate. So, we now know that actually the house is zero taxable, 300,000 of the savings, and 250,000 of the insurance. So whilst his estate was 1.195 million, because some transferred to his wife, it comes completely outside the scope of tax. Only 550,000 is what's going to be taxable. Now, we're also told that there is liabilities, and all liabilities must be settled before dispersion and calculation of inheritance tax. So we have a funeral, which is 3,500. And we also have income tax, which is 7,750. I'm actually just going to click on the solution to double check that. No, I'm not. Yes, I'm happy with that. So now, this is the net amount of Jim's taxable estate when he has died. 538,750. At this point, we are able to go back to our previous calculation. The amount of our nil rate band, which hasn't been used to this point, is 81,000. The nil rate band unused, 81,000. Comes to 457,750. That is the taxable amount. So now we've been able to work out what he transferred when he was alive, how much of his nil rate band that used up. You'll have to just wait. Sorry, the noise is my dog is ringing his water bowl because he's got none left. So 457,750 is the amount of the estate which has not been covered by exemptions, by covered to wife, or by unused nil rate band. Now we have 547,750 times 40%. I will be there in a minute. He's very impatient. I'm just trying to find the solution on my computer screen, which is behind my camera. So the 457,750 at 40%. Is the IHT due, and if we go back to the 31st of July 2020, we calculated that's when it will be due. (31st of July 2020). I'll take photos of both of these boards to put them on Nile, as well as the video being on there as well, so you can watch through them. Follow it through, look at the other questions that are in there, lots of different styles, different things. Somewhere a previous partner has passed away, so nil rate band could be transferring. But anything that you don't understand, please look at it. Try it yourself, have a look at the answer and the video, and then drop me an email. Or on Wednesday, when we have the PEW on the timetable as normal, I will be online at that point for discussion, so you can ask questions then. But if you want to ask questions, you don't have to wait till then. Just email me and I'll get back to you as soon as I can. If lots of people are emailing me the same question, what I will do is I will do another short video which addresses that question. Rather than me answering it 10 times, it's obviously something that needs cleared up. Anything else that you need, drop me an email, ask me on Wednesday. Anything that we can put online, we will put online. The reason I am doing videos rather than live sessions is you can watch this again and again, you can record it, you can still then speak to me, but it's better for you to be able to look back, where did that come from, and relate it back to the answer that's on the screen as well. Okay, no problem, I'll speak to you soon. Stay safe.